We already have accumulated depreciation at the beginning of the year, which is how much? 66,000. Now we must get the depreciation from 1 July to 31 March. Okay, we must get the accumulated depreciation from 1 July to 31 March. Fine. We have been told depreciation rate of 20% per annum on the diminished balance. So that calculation, we are going to say cost price minus accumulated depreciation now. Our cost price is 165,000. Our accumulated depreciation is 66,000. And this will give us our diminished balance. Diminished balance of, I'm sure that will be 99,000. 165,000 minus 66,000 gives you 99,000. It gives you 99,000. Right? It gives you 99,000. Now we have our diminished balance. And then from this diminished balance, we can multiply by 20 over 100, multiply by the number of months for which we have used this vehicle, multiply by 9 over 12. Then we already have our 99,000, multiply by 20%, multiply by 9 divided by 12. It tells us that the depreciation for the 9 months is 14,850. Now we have our accumulated depreciation at the beginning of the year, plus the depreciation for the year on this asset that is being sold, 14,850 plus 66,000. It gives us accumulated depreciation of 80,850. 80,850. Now, we have accumulated depreciation on the date of sale. That is our accumulated depreciation on the date of sale. Now, what was the carrying value? Remember, this is the cost price. And then you have your accumulated depreciation. Your carrying value would then be cost price minus accumulated depreciation. We have 165,000 this side. You have 165,000. And then you say 165,000 minus 80,850. 165,000 minus 80,850. It gives you 84,150. Now, that is the carrying value of the asset that has been disposed. Now you will come here and say disposal at carrying value. Disposal at carrying value, and we calculated the amount as 84,150. You calculated that as 84,150. Good. You see, I made that calculation using the asset disposal account. And then they said it was sold for cash, therefore, here you'll have your bank. So if you don't want to make any mistake, please use the asset disposal account to make this calculation. And also help yourself by having a timeline which will help you to get your months right as to the period for which the asset was used, so that you can provide for additional depreciation we say you update. Here, what we simply did, we updated, brought to date the accumulated depreciation. I'm sure that is okay with you, and we can move on. Right, you don't need to have anything. They just gave you an additional line here. That was not necessary. Then, with this information that we have, they have given us the depreciation for vehicles for the year. You don't need to calculate it. Now, with this information that you have, you are able to calculate your carrying value at the end of the year. Now, this is what I want us to do. How are we going to calculate your accumulated depreciation at the end of the year? Your accumulated depreciation at the end of the year for equipment. Accumulated, now this is the formula that we use to calculate the accumulated depreciation at the end of the year. Accumulated depreciation at end of the year. It will be your, how do you calculate it? It is accumulated depreciation at beginning. To this you add depreciation for the year, and then you subtract accumulated depreciation on asset sold. This will give you your accumulated depreciation at the end of the year. Accumulated depreciation at the end of the year is your accumulated depreciation at the beginning of the year. Add depreciation for the year, subtract accumulated depreciation on assets sold, if it is there. If an asset was sold. If it was not sold, then you will not have any value there. Now, let's go to our equipment. Let's go to our equipment. Our equipment, what was the accumulated depreciation at the beginning of the year? 341,000. There we are. 341,000. What was the depreciation for the year? 58,850. Yeah? I said you add, and then you subtract what? Accumulated depreciation on the asset that was sold. There was no equipment was sold during the year, therefore you won't have any value there. So accumulated depreciation at the end of the year would be 341,000 plus 58,850. That gives us 399,850. This is the value that we bring here. Accumulated depreciation at the end of the year is 399,850. Right. Let us do the same for vehicles. Let us do the same for vehicles. We want to calculate what? Accumulated depreciation at the end of the year. Accumulated depreciation at the end of the year. Very important. What was accumulated depreciation at the beginning of the year? 294,800. 294,800. 294,800. We add depreciation for the year. We have been given depreciation for the year of 98,890. 98,890. And then I said what? Subtract accumulated depreciation on assets sold. Where am I going to get that? I'm going to get that from my asset disposal. This amount. Accumulated depreciation on asset sold. 80,850. This one, what do? I subtract it. This is for vehicles. Now, let's see. We have 294,800 plus 98,890 minus 80,850. It gives us 312,840. 312,840. Now you have your 312,840. Right. Now we are able to calculate the carrying value for equipment at the end of the year. Remember we said when we started, carrying value is cost price minus accumulated depreciation. Now you have 616,000 minus 399,850. There you are. 216,150. 216,150. Now, for vehicles, we still have to calculate the cost price of vehicles at the end of the year. Now, this is a very simple calculation. Remember at the beginning of the year, the cost price of vehicle was 814,000, right? And then we sold a vehicle with a cost price of 165,000. Therefore, we must subtract 165,000. No new vehicle was purchased, okay? How do I know that? Because they've put in a zero there. Because that zero says to me, no new vehicle was purchased. Therefore, the cost price of vehicles that are left would be 814,000 minus 165,000. It will give me 649,000. 649,000. Now, because I have this, actually I should have put this here. Because I have this, in order to calculate this, the carrying value of vehicles at the end of the year, I simply say cost price of vehicle at the end of the year minus accumulated depreciation of vehicles at the end of the year. It should give us the carrying value at the end of the year. Now, you are saying this minus 649,000 minus 312,840. It gives us 336,160. 336,160. Now, what I like about this note is that you are able to check your workings if you were right or wrong. Now, how do I do that? Now I'm going to work downwards. Remember, to get this amount I worked, you must get the same amount whether you work this way or that way. You must get the same amount. Now, let's see. Carrying value at the beginning of the year for equipment was 220,000. We added new equipment of 55,000. And we subtracted depreciation of 58,850. What does it give us? 216,150. Therefore, I know that I'm correct. You see? Then I come to vehicles. I do the same. 519,200. Disposal must be subtracted. Ne? Minus 84,150 minus 98,890. What does it give me? 366,160, which is the same amount I got when I worked the other way around. In this way, I am sure that my solution is 100% correct. But let me warn you, even if your solution is not 100% correct when you check, Don't waste time trying to find a mistake. Then you'll end up wasting a lot of time on one question and you'll not be able to complete the paper. Proceed to other questions, and then you will come later on, after you have finished other questions, to check where you could have added. Otherwise, it will take you a whole lot of time trying to pinpoint exactly where you have found the mistake, where you have made the mistake. But where you have the luxury of time, you can go back and check for mistake. The reason I'm saying that is that when we mark this thing, we normally mark with your error. We apply method marking. Even if you had this amount wrong, but you took this and subtracted that, we'll still give you that mark. Say, therefore, there is no need for you to go and try to waste a lot of time trying to find out exactly where you had made a mistake. So that is a tip that I'm just giving. Important things that you should remember. One is that whenever an asset is sold and you want to check whether the asset was prepared, was sold at a profit or a loss, you must prepare the asset disposal. And then you'll have your cost price on your left-hand side and your accumulated depreciation on your right-hand side. But always must be very careful. Do not use accumulated depreciation at the beginning of the year. Update it so that you have an amount of accumulated depreciation on the date of sale. Then you will have your selling price. This is the selling price of the particular asset. Now, because this was sold at carrying value, there is no profit or loss on sale of an asset in this particular activity. But in other activities, you may find that if an asset is sold for more than its carrying value, then you will have a profit on sale of asset. If it's sold for less than, then you will have a loss on sale of your asset. Right, learners and colleagues, educators at schools, we are now going to a break for 5 minutes. And on our return, we would then handle the second question. And then we'll handle them before we move to the next activity. Thank you.